Hey everyone, welcome back to your channel name. Today, we're answering a question that could change your financial future. What if you invested $10,000 in Fidelity's top 5 index funds and forgot about it? I'll show you real data, the exact funds to pick, and how much you could earn over time. Spoiler, it's life-changing. Let's get started. Why Fidelity Index Funds? Why Fidelity? 3 words: low fees, diversification, and simplicity. Fidelity's index funds let you own hundreds, even thousands of stocks with just a few clicks. And their zero-fee funds mean you keep more of your profits. For example, the S&P 500 has historically returned about 10% annually, but most mutual funds charge 1% fees. That's 10,000 lost on 10,000 investments over 10 years. With Fidelity, you pay almost nothing. Let's break down the 5 best funds to crush your financial goals. The 5 funds plus top holdings. First, FZROX, Fidelity Zero Total Market Index Fund. Fee, 0.00%. 10-year average return, 12%. Top holdings: Apple, 6.2%. Microsoft, 5.8%. Amazon, 3.1%. NVIDIA, 2.9%. Google, 2.7%. Key sectors: tech, 30%. Healthcare, 13%. Consumer discretionary, 12%. This is your foundation. It's like owning the entire U.S. stock market. Tech giants, healthcare innovators, and even your favorite retail brands. 2. FZILX, Fidelity Zero International Index Fund. Fee, 0.00%. 10-year average return, 8%. Top holdings: Taiwan Semiconductor, 2.1%. Nestlé, 1.5%. Samsung, 1.3%. ASML, 1.2%. Key sectors: tech, 18%. Financials, 15%. Industrials, 13%. Go global with companies like Samsung and Nestlé. International stocks add diversification and tap into growth outside the U.S. 3. FXAIX, Fidelity 500 Index Fund. Fee, 0.015%. 10-year average return, 14%. Top holdings: Microsoft, 7.1%. Apple, 6.9%. Amazon, 3.5%. NVIDIA, 3.0%. Meta, 2.2%. Key sectors: tech, 28%. Healthcare, 13%. Financials, 11%. The S&P 500 is the gold standard. This fund is packed with household names that print money year after year. 4th, FSMDX, Fidelity Midcap Index Fund. Fee, 0.025%. 10-year average return, 11%. Top holdings: Dexcom, Diabetes Tech. Trade Desk, Ad Tech. Splunk, Cloud Software. Key sectors: industrials, 18%. Tech, 16%. Healthcare, 12%. Mid-caps are the Goldilocks zone, big enough to be stable, small enough to grow fast. Think companies revolutionizing healthcare and tech. 5. FSSNX, Fidelity Small Cap Index Fund. Fee, 0.025%. 10-year average return, 13%. Top holdings: Shockwave Medical, HeartTech, NovoCure, Cancer Treatment, Axon, Police Tech. Key sectors: industrials, 19%. Financials, 17%. Tech, 14%. Small caps are high risk, high reward. These companies could be the next Amazon or Apple. Just don't panic during market dips. Together, these funds spread your $10,000 across 4,500 plus companies worldwide, from tech titans to tiny innovators. Now let's see how they grow your money. The 10K investment strategy. Here's how to split your $10,000 like a pro. 40% $4,000 in FZROX, your rock-solid core. 20% $2,000 in FZILX, global diversification. 20% $2,000 in FXAIX, S&P 500 stability. 10% $1,000 in FSMDX, mid-cap growth. 10% $1,000 in FSSNX, small-cap moonshots. Why this mix? Diversification. You're covered if tech tanks, thanks to healthcare and international stocks, or if small caps soar. Now let's project your returns using historical data. 5 years, approximately $17,500, 9 to 10% average return. 10 years, approximately $27,000, thanks to compound interest. 20 years, approximately $73,000. Yes, really. But remember, the market has crashes. In 2008, it dropped 50%, but doubled 5 years later. Stay patient. This strategy only works if you hold long-term. Risks? Sure. A recession could cut your portfolio in half short-term, but here's why this works. Low fees equals more money compounding. Diversification equals no single stock can sink you. Time. The market always trends up over decades. Compare this to picking stocks. 90% of traders lose money. Or crypto, way too volatile. This question market's boring but bulletproof. So, are you ready to turn $10,000 into a fortune? Hit like, subscribe, and tell me in the comments, which of these funds excites you most? Grab my free investing checklist below to start today. It's linked in the description. Thanks for watching, and remember, the best time to invest was yesterday. The second best time is today. See you next time. This content is for educational purposes only. Always do your own research or consult a licensed financial advisor. Investing involves risk, and past performance does not guarantee future results.